Okay, good morning. We're going to be covering chapters 4 and 8 today, but before we get started, we've got an announcement. So we're going to turn it over here to... There you go.
Hi everyone, my name is Courtney Glenn. I am currently a candidate in the running for the Senator of the College of Business for undergraduate student government. So I'm here to talk to you just really briefly about USG and why I'm a good candidate for it. So undergraduate student government, there's a bunch of different positions. There's a senator for each college, and they act as like the liaison or the communicator between the college and the dean and all the students. So that's the position that I'm running for the College of Business, and then there's also director positions that direct academic affairs or programming like Flash Fest and concerts and stuff like that. But like I said, mine is the Senator of the College of Business position that I'm running for. Voting is actually tomorrow, Tuesday, on your Flashline account or on KentStateUSG.com. Either one is available. So on your Flashline account, there'll be a section and you can just click Vote for USG. It's running from 8 a.m. to 6 p.m. tomorrow, so it's not all day. Make sure you jot that down. A little bit about myself. I'm a junior managerial marketing major in the College of Business. I love the College of Business, super excited about it. I currently hold 3 positions in 3 separate organizations on campus, so I'm pretty involved. I really like to stay involved both on campus and in the community. One thing I do want to work on some more communication skills within each major or within the College of Business as a whole. I know we don't really have many bulletin boards in this building at all, and that's something that colleges really need to have as a communication resource for different things, so I want to try and work on that. Also, just events, getting to know your major, which the event which is happening this semester, which is really exciting. I think that's a really good thing for younger freshmen, sophomore students to get to know their major better before they go further on into it. So I really appreciate you guys having me here today. There's a little flyer up here if you forget the time for voting. Has all the information on there for me as well. Thanks again for letting me come and talk to you guys today.
Thank you. Thank you. I'll be watching Courtney. Courtney was a student in class last semester. So whether you vote for her or not, do vote. It is tomorrow. It's on Flashline. It's really convenient to do. And Courtney is a delightful individual. So there's my plug for her. But, okay, so back to our subject matter. Okay, learning catalytics is 50% participation, 50% accuracy today. You can expect that pretty much the rest of the semester. I'll let you know at the start of every class what we're doing. Okay, homework that's due this week. We have chapters 4 and 8. Chapters 4 and 8 are sandwiched together because 4 is very small. We're going to finish 4 in half of the class period today. So I was waiting to do chapter 4 till we got a chapter that was smaller. It could go with it and make up 1 week, and that's why 4 and 8 are together. Exam 2 info quiz is due this week as well. This is roughly 5 questions, multiple choice about the exam. It should be super easy for you. Those 2 items are due this Saturday. So that's what's due this Saturday. So beyond the homework, you do have this exam 2 info quiz. Now, there's another thing lurking out in my accounting lab. It's practice exam 2. This is due before you take exam 2. It is not due this Saturday. It is available until you take the exam. It has to be finished by 4 p.m. on Wednesday, March 18th. Now, just as an aside here, when we have this exam coming up, it is over chapters 4 through 8. And that's not a massive amount of content because 4 is very small. Again, we're going to cover 4 in the first half of today. Chapter 8 we'll cover this week. It is not a massive chapter. It kind of overlaps with an earlier chapter 5. There's some overlap with. So this is not a massive amount of material. This is still a challenging exam, so you still have to prepare for it. Now, this practice exam, you have up to 5 attempts to take the practice exam. If it were me, I would use almost all, if not all, 5 attempts, because every time you take the practice exam, you'll see something different. It will be different each time you take it. The practice exam is the best way to know if you're prepared for the exam. You should be studying your notes. You should be reviewing what we do in class. You should have read the book already. But then the practice exam will give you a good feel for if you're ready or not. Now, the practice exam does count as a quiz. If you're particularly worried about the impact of the practice exam on your overall course grade, know that you can practice the same content in study plan. Now, the difference between the two is study plan is much larger. Study plan is a larger population. Practice exam is more narrowly focused. So know that. And the reason I would take the practice exam more than once is if you take it once and you do really well, you may have a false sense of security, because maybe there's something if you took it again that you need a little bit more review on, and it'll pop up the second time. But study plan is a great tool. It's just much broader than what's in the practice exam. Everything in the practice exam is in study plan somewhere. So you can use study plan. Study plan is not included in the calculation of your grade. So study plan does not directly impact your grade. The reason I say directly is if you do use study plan and you do practice in it, it can indirectly impact your grade in that you'll know the material better and score better. But study plan, when you're in study plan, it has zero impact on the calculation of your score in the class. So see what else I have here. There is no class next week during exam week. So after this week, we will not have class for 2 weeks, because then the following week is spring break. Okay, so exam 2. It is Monday, March 16th through Wednesday, March 18th. It starts at 9 a.m. on Monday, and the last time you can start it is 4 p.m. on Wednesday. I'll sound like a broken record here, but last year, looking at the whole academic year, there was one exam where there were lines between 2 and 4 hours long, and that was the exam that was the week before spring break. So if you're in sections 1 or 2, I cannot urge you strongly enough to take that exam Monday or Tuesday. It may very well be okay Wednesday, but I would not bet on it, because there are 8 exams going on next week in the lab, which means there's lots of students taking exams, and a lot of people tend to wait until later to take the exam, which I understand. But in terms of your own planning, it would be much less stressful to plan for Monday or Tuesday. So that's sections 1 or 2. You want to plan to take it earlier in the week, because there is absolutely zero guarantees about length of line, and I think this is the one exam where we could be caught in a long line situation Wednesday afternoon. Sections 5 and 6. So you're taking the exam with ProctorU, and you can schedule with ProctorU. The earlier you schedule with ProctorU, the better selection of your dates and time. ProctorU is proctoring exams for across the country. ProctorU has virtual lines as well. They do get busy at certain times, and this one, again, is a busy time for them. So even if you're taking it with ProctorU, I would schedule Monday or Tuesday. The closer you get to midweek to late week, it's going to be, could be potentially stressful. Because when you take an exam, you don't want the stress of something else affecting you as well. So again, if you could plan to take the exam Monday or Tuesday, do so. I know there'll be people that take it Wednesday, and you'll get that email reminder from me Wednesday morning telling you, how many people have left to take it if you're taking it in sections 1 or 2. So I know that happens, but do try. The earlier you can take it, the better. So there's my advice about the exam. So the exams, chapters 4 through 8. Chapter 4, very small, and you'll see that reflected in the practice exam and in study plan as well. Okay, we have a question in Learning Catalytics. It's been there for a while. You should have answered it by now, but what is due this Saturday, March 14th? Select all that apply. I'm going to put up the answer here. It'll remain open for not too much longer, but a little bit longer, so it won't close on your device yet. But remember, it's a Chapter 4 and 8 homework. It's one homework, and then the Exam 2 info quiz. Okay? Okay, so that will stay open for another little bit. Good. Okay. There's a question, is there a potential problem with taking the exam on ProctorU on Wednesday? Keep in mind, I'm very risk averse, so I would say I would never take my exam the day that it's due, because then you have no backup plan if something goes wrong. So I'm very risk averse, and that's why you hear me talking like this. There's always a potential problem if you wait till the last day, specifically. The people that I worry the most about are the ones that are taking it at noon or later on that last day, because if anything happens, then you have no backup plan. You have nothing meant in no way. And then keep in mind, if you wait till the last day to take it, this has happened before. Someone waits till the last day to take it, schedules it for noon on Wednesday, and has another class at 2 o'clock. So they go to get on noon on Wednesday, and something goes wrong. Their Wi-Fi is dropping them, or something's going wrong, and of course, you're trying to take an exam, your Wi-Fi is going out on you, things are panicking, you're like, I have another class at 2, I've got to leave, I'll just deal with this tomorrow. Well, no, there's no tomorrow then, because the exam is due Wednesday. So that's a very long answer to your question, Michael, about is there a potential problem with taking the exam on ProctorU on Wednesday? You have no backup plan if something happens on Wednesday. So that's where I would say there. Okay. So chapters 4 and 8. We're going to start with chapter 4 today. Very small coverage of chapter 4. We're going to talk about internal control briefly. Internal control is a system designed to prevent, detect, or correct fraud and errors. Okay, and so we have this system of procedures and processes in place to prevent, detect, or correct errors. This internal control system is the responsibility of management, and they're the ones that make the plan and set up this whole internal control system. So internal control systems are in place to safeguard our assets, essentially. So we have internal control. We're preventing fraud and errors. So we want to prevent them, we want to detect them, we want to correct them. This is that whole system that's in place. So there are certain internal controls. We have some examples of internal controls. And examples of internal controls include things like smart hiring practices, which would be doing background checks on people before you hire them. Separation of duties, we'll circle back to that. Comparison and compliance monitoring, making sure that we're doing what we're supposed to. Adequate records. We have to keep records. We have to keep receipts. We have to keep documentation of what we're doing. We limit access to only people that need it. That's why we have keys. That's why we have passwords. Proper approvals. We have to get checks over a certain amount signed, things like that. Okay, the separation of duties is pretty key. Separation of duties means that you need to separate the asset handling. So this would be the cashier who handles the cash, doesn't make the journal entries for it, and doesn't approve transactions. We have to separate those 3 items. Got a couple stories about this whole separation of duty and internal controls. Netflix. Okay. In November this last year, Netflix filed a civil suit against its former VP, senior VP of IT operations. Michael Kale was the guy's name. They filed suit against him. He left Netflix in August. And after that time, Netflix discovered that Michael Kale had a scheme going at Netflix. So Michael Kale was the senior VP of IT operations, and he had responsibility for finding vendors to do work for technology work for Netflix. And that makes sense that he would go out and find companies to do coding or do whatever they needed to have done from a technology standpoint. So he entered into the contracts. So he signed contracts with companies. And then he also had the authority to authorize payments to companies. So here's what Michael did. He had a friend, and they don't know how widespread the scheme was, but he had a friend or an acquaintance that had two companies. So Netflix entered into contracts with these two companies to do technology work. And so then the companies would do the work, or some work, and then they would present their invoice for payment, and Michael Kale always got the invoices, and he would always authorize them for payment, so then the vendors would be paid. So then after the vendor was paid, the vendor would pay Michael Kale to his personal account 12 to 15% of the invoice amount. So this was his deal with these two companies. Netflix thinks it was more than these two companies, but in their court filing, it's fascinating because they have emails that Michael Kale sent from his Netflix emails to these vendors stating, about, hey, I authorized the contracts, time for you to pay me my money, and they refer, so they have all these email trails where these companies were paying him kickbacks. Kickbacks are not allowed. So Netflix is suing Michael Kale for this, and they've got it documented fully. But what's interesting about this case is right on the face of their filing with the court, they have that Michael Kale was a trusted senior employee of Netflix, and he had responsibility for entering into contracts and authorizing invoices. And right there in that sentence, Netflix is violating internal control procedures. They don't have separation of duties. And so they're acknowledging it in their lawsuit that they didn't separate duties. But anyway, so that's winding its way through the court system. As an aside, you know what Michael Kale's doing now? I found this the most shocking part of the whole story. He's a senior VP at Yahoo now. So, but this is all public knowledge, so apparently it's okay there. So, okay, so that's one story. Second story, again, about this internal control. Smuckers, down in our neck of the woods. Smuckers has a private jet at Akron-Canton Airport, and they have a senior mechanic to service the jet. So they had a senior mechanic who, I think his name was Mark, and his name is escaping me right now. But his job was to service the jet and maintain it. And so what he did, he worked for Smuckers for something like 20 years. So what he did is he created a fictitious company. So he had created this fictitious company, and he set up a P.O. box near him. He lives in Greene, and he had a P.O. box in Greene for this aircraft maintenance company that he formed. So over the course of 16 years, he would bill Smuckers using this fictitious company for work that either he did as part of his job or work that wasn't ever done. So Smuckers would pay the fictitious company, and this person, the mechanic, would go to the bank with the check and deposit it into the bank account that he had set up for this fictitious company. Because anybody can file a document with the state that says, I'm going to operate business like this. So Smuckers was paying. Over the course of 16 years, Smuckers paid over $4 million to this company that he set up. So when Smuckers, the FBI has actually charged him. He's no longer working with Smuckers. But the FBI filed a case against him. And when they deposed this guy's boss, his supervisor, and said, well, why didn't you approve the invoices? This guy said, well, this mechanic was a trusted long-term employee. I mean, he'd been with Smuckers for 20 years. He said, I didn't feel I had to check him. I took his word for it that this was fine. So Smuckers says the $4 million over 16 years is not material to them, which is true. I mean, they're not going to miss the $4 million. But this was a violation of internal controls. We had a guy authorizing the work and authorizing invoice for payment, so no one caught on that there was no work actually being done here, that he was just billing Smuckers and getting money. How they caught him, there was a check that wasn't cashed, and they had to start pursuing why it wasn't cashed, and there was something that happened. Then also his lifestyle was a little more excessive than you would expect for a mechanic. So as a postscript to this story, he was just sentenced to 15 years in jail a couple weeks ago for this. Okay, so there's internal control. Are these PowerPoints? You know, internal control, I had just a couple slides up, and I don't know that I put them in there. You could look under Chapter 4. They might be under a separate file name. So I had I put 4 and 8 together, so if you're looking in 8, because this is the end of the internal control slides. So that's almost. There's bank recs. It's either in Chapter 4 or Chapter 8. They're somewhere. So. Okay. So now we're on to the last part of Chapter 4 for us, and it's a bank reconciliation. A bank reconciliation is an important internal control procedure because what it does is it says, we have this outside bank statement coming into us telling us what our bank balance is, and we want to compare that to what we have as our balance. And this is huge because it will never be the same until we do the bank reconciliation. So we're going to do a bank reconciliation, and what I've got on the slide here is really important both for exams and homework and for upcoming Learning Catalytics questions. So there's a big hint for you. You're going to need this. So you should have it written down. This is a basic bank reconciliation form. There is no magic to left side or right side. It's just convention. It has nothing to do with debits and credits. But on the left-hand side, we have the bank balance. This is the bank balance that comes on our bank statement. And then we have certain adjustments. We add our deposits in transit. We subtract our outstanding checks. And then we add or subtract correction of bank errors and adjusted balance. I'm going to pause for a minute, let you write this down. I'm going to watch some people writing, and when they're finished writing, I'm going to resume talking about this. So it will be quiet for a minute or two while we get up to here. I'm going to talk about each one of these items in just a minute, so I'll be answering that and other questions in just a minute. I'm just waiting for the writing to cease, and then I'll talk about these. This bank reconciliation form, the reason you need to write it down right now is we're going to use it both for a homework problem and for a couple questions for Learning Catalytics, so you'll need it in front of you. But this reconciliation form is on the exam equation sheet you'll have for the exam. So know that this is on there. You should familiarize yourself with that sheet before you take the exam. It's on Blackboard under exam info, by the way. But anyway, so it's not something you have to memorize, but you need to have it written down so you can use it in class here. So starting with the left side, the bank balance. Let's talk about this. The bank balance is what comes on our bank statement. So this is what the bank says we have as of right now. Now, we're going to need to add deposits in transit. Now, deposits in transit occur when I go into the bank, I go to make a deposit, and you know that little window you see on the teller window that says all deposits received after 4 p.m. or whatever time will be posted tomorrow? That makes a deposit in transit, because if they print your statement that night, you've got a deposit you made, but the bank doesn't have yet. So that's a deposit in transit, so you need to add that. Then next up is subtract outstanding checks. And those are checks that you've written and you've sent out but haven't been cashed yet. So maybe they haven't made it there in the mail, or somebody hasn't cashed them, or for whatever reason. And then we might have addition or subtraction of bank errors, but we come up with an adjusted bank balance there. So that left column, those things in the left column are timing errors only. We never have to make an adjustment for them. We put them on the bank reconciliation to come up with what our true cash balance is, that adjusted balance there. They're on there, but they will work themselves out in the next few days after the statement. So you never have to do any journal entries for things in the bank column. Now, on the right-hand side, we have a lot of things. We start with the book balance. The book balance is what we have in our general ledger. This is the T account balance of cash after we've posted all the transactions. So we're starting with our general ledger balance. It's not going to be the same as the bank because there's those timing errors that we talk about, and then there's some other things. So let's start with that first block. We add bank collections. A lot of times companies will have customers remit payments to their banks, actually. So when you make a credit card payment, if you don't pay it online, if you pay it by writing a check and mailing it to a P.O. box, chances are you're mailing it to a bank's P.O. box, and the bank is collecting that payment for the credit card company. So there's bank collections we have to add that we don't have yet. Interest revenue. On your checking account, you can earn interest revenue. So when the statement comes, you have to add in the interest revenue on the statement. EFT is electronic funds transfer, and those are wire transfers that you haven't acknowledged. They've come in electronically some way, and you have not yet recorded them. The next box down, subtract service charges. Service charges are what the bank charges you each month. The next one, NSF checks are non-sufficient funds checks. These are checks that have bounced. You've deposited a check from a customer. There's not enough funds in the customer account, so the check bounces. And then EFT payments, these are wire transfers and similar things that you've made but have not recorded. And then finally, add or subtract book errors. We don't know what direction they are. That whole column, those things, add bank collections, interest revenue, EFT receipts, subtract service charges, NSF checks, EFT payments, and add or subtract book errors, you have to make journal entries for every one of those. On the book side, those are all things that you need to record in your books. Those are not timing errors. Those are things you don't have yet. So when you do a bank reconciliation, the bank side of things are just timing errors. On the book side, those are actually things that we need to record. And then we come up with an adjusted balance, and when we're all done with our bank rec, the adjusted bank balance will equal the adjusted book balance as long as we've done everything right. If they don't equal, we're not done with our bank rec yet. So what we're going to do now is we're going to do a, Haley, it's not changing. Mine's changing. Yours is not. Yes. No, it did. Okay, it just went. Yeah, I've been clicking forward and it's not going. Okay. Momentary lapse. Okay, so we're going to do short exercise 4-9. Exercise 4-9, we're going to do a bank reconciliation. So we're going to use that form. And what I'm doing here is I'm putting the form in the bottom. I've left off the words because we aren't going to have enough room for everything, but I'm using the same exact format that we just went through. So in this exercise, all I'm going to do is I'm going to go through and pick out every number in the problem given to me and put it where it belongs. So the first sentence is, the cash account of this company reported a balance of $3,640 on August 31st. That is our book balance. That's what we're reporting in our cash account. Included were outstanding checks totaling $800. So now we say, okay, where do outstanding checks go on a bank reconciliation? They will go down here on the bank side under outstanding checks. Notice that we subtract them because outstanding checks will reduce our bank balance when they're cashed. And we have an August 31st deposit of $300 that did not appear on the bank statement. So that $300 is going to be a deposit in transit and get added to the bank side. So this is all we do for this exercise. We're going through number by number, figuring out where it goes. The next sentence says the bank statement, so the statement that we got from the bank listed an August 31st balance of $4,775. So that is our bank balance. So notice we have a book balance and a bank balance. They're different, and the point of the bank reconciliation is to reconcile them to be the same number. Included in the bank balance was an August 30th collection of $685 on an account from a customer who pays the bank directly. So that's a customer collection from a customer. So we're going to have a bank collection of $685, and that goes on the book side. Because this is a customer that has paid the bank directly, the bank has it, we have not recorded it yet, so it goes on the book side. The bank statement also shows a $15 service charge. Service charges get deducted in that next box down under subtract, a service charge. Then we see we have $20 of interest revenue. Interest revenue is something we've earned, so it's going to increase our book balance, so we'll add that in. And then finally, the last item they tell us is an NSF check for $55. A non-sufficient funds check. This is an NSF check, means our customer gave us a check for $55. We recorded it, we increased cash, we gave it to the bank, it was in our deposit, they put it through the Federal Reserve System, and it's kicked out because there's not $55 in that customer's account. So it comes back to us, so we need to subtract it from our book balance. So we're taking the 55 out. What we do next is we're going to come up with an adjusted bank balance, and we're going to come up with an adjusted book balance. Now, all we're going to do is add up the two columns. So I'm going to take my bank balance of $4,775, add my $300 deposit in transit, subtract my outstanding checks of $800, and I will get an adjusted bank balance of $4,275. Then I'm going to do the same thing on the book balance side. I'm going to take my book balance of $3,640, and I'm going to add my bank collection of $685, add my interest revenue of $20, subtract my service charge of $15, and subtract my NSF check of $55, and I'll get an adjusted book balance of $4,275. It is not coincidence that those two things are the same. That is what we're trying to get to. We are trying to reach the point where our adjusted bank balance equals our adjusted book balance. That means that our bank statement is in balance, we've reconciled it, and we're pretty sure now that we've recorded everything and that we've recorded it correctly. On the bank side, we don't need to record any adjustments because those will work their way out. Those deposits will be posted, and the outstanding checks will make their way through the Federal Reserve. So those will take care of themselves. On the book side, all those adjustments there on the book side need to have journal entries written. And that's where we're going with this next homework exercise. This next homework exercise we're doing says, okay, keeping this same bank reconciliation, let's do the journal entries that are needed. So exercise S410, what we're going to start with is that same reconciliation. So I've just put it at the top there, and we're going to do the journal entries that are needed. The only journal entries that are needed for this are the items that are over in the book balance column, the adjustments over there. So the first thing we're going to do is we're going to write the journal entry for the bank collection. So we're going to have 4 journal entries to write here. We have to recognize these adjustments on the book side because they haven't been made yet. So the bank collection. The bank collected $685 on our behalf. That means cash went up and accounts receivable went down. So what we'll see here is that cash increased with a debit of $685. We would have a credit to accounts receivable of $685. Is my audio still working? Can I get a quick response in the chat room? Can you hear me? Great, thank you. I just heard an unusual beep in my ear, so I just wanted to make sure I didn't get disconnected. Okay, great, thank you. So August 31st, we're having to do the adjustment for the collection from the bank customers. Debit cash, credit accounts receivable. Okay. Now, we're going to do adjustments for each of those items in that book balance column. So the next item down, interest revenue. We got interest revenue from the bank. Again, we're getting more cash, so we're going to debit cash, and then we'll credit interest revenue. So the journal entry is going to look like this. We're going to debit cash, credit interest revenue. We've got 2 more adjusting entries to make as we work our way down that column. The next one is a service charge of $15. So we had a service charge of $15. Now this one, the bank is charging us $15, so cash is going down. So we're going to credit cash. Our debit's going to be something like miscellaneous expense or bank service expense, service charge expense. So we have miscellaneous expense debited for $15, and we're going to credit our cash for $15. And then our final adjustment is this NSF check. The NSF check was a check a customer gave us to pay off what they owed us. So this would have been a check they made in payment for an accounts receivable on our books. So when we have an NSF check, that means the bank's charging us, so we're going to credit cash, and we're going to reinstate that accounts receivable because that customer owes us that money because their check bounced. So we're going to debit accounts receivable, credit cash for that NSF, non-sufficient funds check. Okay, next up, we're going to have a couple questions, and these questions, it's a different format than what we've had before. This one, you're just going to, the question, I'll put it up. The question is going to say, you're preparing a bank reconciliation for your company. Where on the bank reconciliation would outstanding checks go? So how you answer it is you just tap or click if you have a mouse. But with your finger, just tap to which cell the outstanding checks would go on a bank reconciliation. That's all you're going to do. You'll see your dot appear, and your dot has to be in the cell, not on the line, but in the cell. I'll answer that one in just a minute if you want. Okay, while you're answering this, make sure you get an answer in. You just tap on the screen in the cell in which outstanding checks would go on a bank reconciliation. Now, while you're doing that, we're going to leave it open for about 10 seconds. You just tap on it, Taylor. I don't mean to call you by your last name. So you're just going to tap on it. If you're on a computer, you'll just click with your mouse on the cell in which you would put that outstanding checks. Okay, now I had another question, so while we're waiting for people to finish answering, what happens if you as a company issue an NSF check? Wait, first of all, you better not. It's actually illegal. But if you issue an NSF check, you're going to have to owe again. You'll have to pay a bank service charge, and so you're going to have to record. If you made a check in payment, you're going to have to increase cash, increase your liability, and then probably decrease cash for a bank service charge because you get charged for it, and increase bank service charges. So it's never good to do that. You will not have to record your own NSF check in this class because we assume you're not going to do that. Okay. Taylor, are you okay on this? Okay, I'm seeing a lot of wrong answers. So I want you to look back and on the bank reconciliation, we just did a homework problem and we had the form. And there was a cell on that form that had outstanding checks on it. And next to outstanding checks, you know, you could look to see the word that's next to it to make sure you're selecting the right cell. We're going to be closing this question in about 10 seconds. But look at the bank reconciliation. We just did one. Notice that on this question, I don't have a cell for bank errors or book errors. I just left that off. But here we have the bank balance. Do you add or subtract outstanding checks to the bank balance? Do you add or subtract outstanding checks to the book balance? That's basically. And you just tap in the one. Great. Thank you, Taylor. Okay, let's close this. And the answer is you subtract outstanding checks. Okay, we're going to do another one. Okay, so similar, same idea. And this one, you're preparing a bank reconciliation. There's interest revenue on your bank statement. So you've received interest revenue. You've not yet recorded in the general ledger or the books. Where on the bank reconciliation would interest revenue go? So again, tap or click onto the cell where you would put interest revenue. Okay, fun. Okay, interest revenue on the bank reconciliation. Again, refer back to the bank reconciliation. Interest revenue was on there. It was abbreviated as int rev or something like that, but it is interest revenue. Where would that go? Notice that I do not have a line for errors. But what do you do with interest revenue? We're going to close in about 5 seconds. Okay. Interest revenue is added to your book balance. So know that you'll have the bank reconciliation form on the exam. You have to know what to do with certain items. Do you add or subtract them to the bank balance or the book balance? Okay, and then I have one more. This one's just a plain straight up true false. So every adjustment on the bank side of the bank reconciliation needs to be recorded in the books. So this is the bank side. This is talking about the things in the left column where we made the bank adjustments. This is outstanding checks and deposits in transit. Do those need journal entries? That's what this question is asking. Okay, every adjustment on the bank side of the bank reconciliation needs to be recorded in the books, true or false. We're going to close the question in about 10 seconds. Okay, so what we're talking about here is the question's asking about these adjustments on the bank side. So it's the question saying, do you have to make journal entries for these questions? The question is actually false. It's false because the items on the right side on the book balance are the ones we need to do journal entries for. Right now, we're going to redeliver that question. You have a second chance. You have to answer it. This question is coming back out through Learning Catalytics. You have to get it right. You have to answer it the second time to get credit, and it's going to be open for about 5 or 10 seconds. We're closing it in 5 seconds. Okay. Okay, so if you got the right answer the second time, you get credit. That second time always replaces the first. We had a fair number get it wrong the first time, so you got a second chance there. Okay, next up. So now we're into Chapter 8. So we've left behind Chapter 4. Chapter 4 is pretty short. And what we're going to be doing in Chapter 8 is we're going to be talking about long-term investments. When we talk investments in should sound kind of familiar because in Chapter 5 we talked about short-term investments. Those were marketable securities, and we had several categories. We had trading securities, held to maturity, and available for sale. And those were current assets, meaning that they were going to be sold or would be maturing within the next year. Now in this chapter, we're talking about those same kind of investments, except now they're not maturing within a year. We don't have the intention to sell them right now. So those are called long-term investments. So there'll be a lot of similarities in this chapter between Chapter 5. And some of this we're going to, okay, so we need to know some vocabulary. We have, on one hand, a bondholder. A bondholder is someone who buys bonds. And they will go out and buy the bonds of another company. And when they buy the bonds of another company, they have a asset called investments in bonds or something like that. So they have an asset, and they will get interest revenue from this bond. On the other hand, we have an issuing corporation that issues the bonds, and they have a bond payable, a liability, and they have interest expense. A bond is also known as a debt security. Okay, a debt security. A bond, I as an individual can go out and buy bonds. There's a company called Solar City. In Solar City, what their business is they install solar installations all over the country. So you could get Solar City to put in a solar power generating system for your house, for example. They deal with a lot of small businesses, and to finance their operations, they issue bonds, which are debt securities. So Solar City goes out and they sell bonds. So if I as an individual say that I believe in what Solar City is doing, and Solar City says, I have a 4-year bond that pays 4%. And I think, okay, I want that bond. So I go to Solar City, I give them $1,000, and they give me a bond. The bond that I get from them is a debt security, and it's a promise to pay me at the end of 4 years the $1,000 and to pay me 4% interest per year. Typically, that interest is paid twice a year, so you get 2% every 6 months. So Solar City issues this bond. I get it. I have an investment. Solar City has a liability. I have the asset because I've bought the bond. Solar City has a liability because it's issued the bond. So in this chapter, we're dealing with it from the investment standpoint, from the asset standpoint. A couple more chapters from now, we're going to look at liabilities, and we'll be looking at these bonds from the standpoint of the issuer of the Solar City side of things. So, got a quick question for you here. Woody Corporation purchases a $1,000 bond issued by Solar City. Okay, so Woody Corporation goes out and gets a $1,000 bond issued by Solar City. Woody Corporation, does it have A, an investment, an asset, or B, a bond payable, a liability? Okay, Woody Corporation purchases a $1,000 bond issued by Solar City. Woody Corporation has an investment or a bond payable. This is closing in 5 seconds. Okay, questions closed. And this is investment. Solar City has the liability. Woody Corporation would be purchasing the bond. And in this chapter, we are talking about the investment side of things. Okay, so we're going to have a couple things where we need to know some vocabulary here. So here it is, and some things to know about this. Available for sale securities. So these are securities that we've purchased, and they're available for sale. We don't have immediate plans to sell them, but we don't necessarily want to hold them to maturity either. They can be debt securities, not held to maturity, or equity securities. Debt securities are bonds that we bought. Equity securities are stocks in other companies. So we can have debt securities, which are bonds, or equity securities, which is stock in another company. So either of these categories, we record them at what we paid for them. And then generally accepted accounting principles require that we revalue them at the balance sheet date. So every time we issue a financial statement, we're going to mark these to market. We're going to show them at fair value. So because these have things, we can look up the value. There is an objective value for these things, and that's what we show them on the balance sheet date at. We carry them at current market value. So it's important to know that we do revalue these to fair market value. And the reason we can do that is because there is an objective value for it. We can't go revalue our buildings or other things that we own because there's no objective value for it. But these items, GAAP says, let's revalue them because we do have a market for them, so we can look that up. Couple more vocabulary terms we need. Stocks and bonds. An investor is the one that owns the stocks or bonds. So the investor is the one buying the bond or buying the stock. The investee is the entity that issues the stock. So you need to know the vocabulary terms. So the investee issues the stock, and then a bond, the entity that issues the bond is a debtor. Yes?
I was just wondering, a stock and a bond?
Yes, the question is there a difference between a stock and a bond? Okay, it's a good question. So when Solar City actually issues stocks and bonds. If we buy a bond in Solar City, we're getting Solar City's IOU. They will pay us back the $1,000 at the end of the maturity date. So they'll pay us back and they'll pay us interest. We don't own any part of Solar City other than the obligation to pay us. A stock, if we buy stock in Solar City, we're actually an owner, part owner of them. They're issuing stock to us. They never have to pay us back, and they never pay interest. They can pay a dividend or not. And there's all kinds of theories about how much stock and how much debt should you issue, and that's beyond us. But yes, there is. A bond is considered much less risky for an individual to buy, and therefore bonds typically pay less than stocks do. Because a bond, you have a legal obligation to be repaid. If the company goes into bankruptcy, bondholders are paid before stockholders get anything. Okay, now we're going into the accounting for these available for sale securities. So this is not a learning catalytics question. Notice it's listed as not a learning catalytics question. Which of the following product groups represents the highest dollar value in U.S. exports? So this is just in your own mind. This is guess to see if you get it right. So, and this is coming up to a company I'm going to talk about. So out of these product groups, which is the highest dollar value in U.S. exports? Okay. So settle in your mind on an answer. This is not learning catalytics. Okay, it's actually machines, engines, and pumps. So I thought that was mildly interesting. This is leading up to the company I'm going to talk about. Okay, and actually, if you look at that list of things, these are the highest dollar value exports from the U.S. to other countries. So we have machines, engines, pumps. We have electronic equipment, oil, vehicles, and then aircraft and spacecraft. Okay, so this is where I'm going with this. Okay, so now, in your own mind, what company exports the highest dollar value of U.S. products? And this one I was totally fascinated by because I would have never guessed this. And the answer is Boeing. Okay, so even though it's number 5 category, this company exports the highest dollar value. And I guess that makes sense because aircraft are really big ticket items. But Boeing has more U.S. exports than any other company in terms of dollar value. Okay, so this is Boeing Company's 10K, and this is its 2013 10K because it has not yet issued its 2014. It should be coming out in the next few weeks. There's going to be a whole lot of 2014 10Ks being issued. They have to be issued by the end of March, thereabouts. So you're going to see a whole lot of 2014 10Ks with calendar year ends being issued. Anyway, so on their balance sheet, this is their balance sheet. It's called their Consolidated Statement of Financial Position. That's their balance sheet. So we see up in current assets, we see short-term and other investments, okay? And we see investments down in the long-term asset category. Okay. These two items together, you don't need to know to do this, but these two items together, if I add them together, they're $7,374. So investments are shown in two places on the balance sheet, up in current assets and down in long-term assets. In Chapter 5, we looked at the current assets down, and right now in this chapter, we're looking at investments. So now, this is the balance sheet. Now I can go back in the notes to the financial statements for Boeing, and it'll tell me, real quick, see my total investments there are $7,374. So I look in the notes to the financial statements. I see a note on page 77 with note 9, investments, and the total for this 2013 is $7,374. So what they're doing is they're telling me what kind of investments Boeing has. So the first item is a time deposit. Time deposits are CDs. You go to the bank and you get a 2-year CD. Boeing has a bunch of time deposits. Okay, then they have pledged money market funds, and they have another note about that. Next one down, available for sale investments. So what we're talking about in this chapter, available for sale. And then the next item down, equity method investments. Okay, what are these? And there's a big dollar amount. When we talk about available for sale investments, trading securities, etc., when we talk about equity securities, stock in another company, when we talk about how we account for it, we're talking about it as though the company owns less than 20% of the outstanding stock of that company. So Boeing, though, for these equity investment companies, it owns somewhere between 20 and 50% of the outstanding stock of the companies it's buying in. So maybe it's buying a supplier. The assumption is if a company owns 20 to 50% of the outstanding stock of a company, it exerts significant influence. So it has to use a different accounting method altogether, and that's called the equity method. We will not be doing the equity method in this class. If you read the chapter and you see equity method, you don't need it. If you're an accounting major, you'll know it very well by the time you graduate, but you don't need it in this class. Now, so that's if I own 20 to 50% of the outstanding stock. If I own more than 50%, if Boeing owns more than 50% of the outstanding stock of a company, then it consolidates it, meaning it adds that company's stuff into its own balance sheet. So when you see consolidated statements of financial position, that's because Boeing it's consolidating some of its investments into its own books. So everything we do in this class assumes that we own less than 20% of the outstanding stock, because then we get into things that are beyond our scope. But Boeing has some equity investments, and then it has restricted cash and other investments. So these are exactly what we're talking about in this chapter, especially the available for sale investments. So they do show up in companies. We have a lot, companies all the time have extra cash. What do? They put it in stocks and bonds. Stocks are more risky but offer a higher return. Bonds have a lower return but a lot less risk. So there's philosophy about how much do you buy of both. You have a balanced portfolio with some of each. Okay, so the available for sale securities, when we talk about available for sale securities, we own less than the 20% of the outstanding stock. These are considered to be long-term. They're recorded at cost, and they're adjusted to fair value at each reporting period. Okay, I think we've gone as far as we got in my first class today, so I think we're going to call it a day. On Wednesday, we will finish up Chapter 8. We will do, I think all the homework for Chapter 8 are pretty close to it. So this is not a bad chapter in terms of length, but do think about studying for the exam, and I will see you on Wednesday.